Hello and welcome to another session of the My Solo 401k Financial, My Community Daily Webinar Series. I see that we've already got some questions chatted up. Thank you so much for bringing the questions. We'll get started with those questions. And so if there are other questions or topics that you wish to discuss, please continue to chat over questions so we can be sure to get to them all. As always, the presentation is being provided for educational purposes only and should not be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. So this is another session, another daily solo 401k webinar. We had one earlier today. This is the second Q&A session with my solo 401k financial, where we help you to stop overpaying taxes and start building real retirement wealth. Today's topic, how to upgrade a Fidelity Solo 401k to allow 2025 Mega Backdoor Roth Solo 401k contributions. So again, please use the chat now to ask questions on today's topic or anything else. Please chat them over now so that we can be sure to get to them all. Let's get started. So as I mentioned, we'll get started with the questions that were chatted up. First question. I had a sole proprietorship in 2025. On January 5th, I registered my practice as a professional corporation and faxed in 2553 to the IRS on January 6th for S corporation election. How should I open my solo 401k plan? So thank you so much for the great question. It's a common question, as oftentimes solopreneurs will start out as a sole proprietor, and then as their business matures, they may then graduate to an S corporation. And so as long as you are self-employed, meaning you're reporting earned self-employment income on your taxes with no non-owner, non-spouse, full-time W-2 employees, you would be eligible to set up a solo 401k. Now, it's noteworthy that there cannot be any employees working for any business owned by you or a spouse, if any. Now, just because how your business is organized, so the legal structure through which your business operates changes, that will not impact your ability to set up a solo 401k, nor will it impact your accounts or your investments. So sometimes people will start out with us operating as a sole prop, and then they'll need to upgrade their plan documents to reflect that their business is now operated as an S corp. And again, that'll just be a document update. It won't impact their investments, it won't impact their accounts, etc. Now, if you're just starting out with a solo 401k, when you complete our online application, you're going to want to enter and complete that application as an S corp, because that's what you are going forward. And you can aggregate from all sources of self-employment income. So for example, if you set up a plan now, here in 2025, now in 2026, you can still make 2025 contributions, even if you're setting up a new plan here in 2026. Now, the types of contributions that you can make and the deadline by which you have to make those contributions will depend on how your business is taxed. But if you set it up as an S corp, you could still make 2025 Mega Backdoor Roth contributions by your S corporation deadline, including any timely filed extension. And even though you're setting up the plan underneath your S corporation, you can still aggregate from all sources of self-employment income. So even income that you earned and reported as a 2025 sole proprietor could be used to justify those 2025 contributions that are being made to the solo 401k plan that's being set up under your S corporation. Hopefully that makes sense. You could also do it as the sole prop, but then you'd have to later upgrade the plan documents. So we would have to process an amendment, and we charge a one-time fee of $300 to do that. Again, it wouldn't be a impact to your accounts or your investments, etc. So technically, you could do it under either approach. Hopefully, that makes sense. Thank you so much for the positive feedback. Appreciate that. So we do offer Rob's 401k plans. There's no such thing as a Rob's IRA, but we do offer Rob's 401k business financing plans, which is a very specific type of structure that's used for business financing, as the name implies, whether you're funding a new business, funding the acquisition of a business, or even funding an existing business. So if you have questions around the Rob's 401k business financing plan, it's an open session, so please don't hesitate to ask those questions. We're happy to field them. Hello, thank you for joining. Well, again, if you got questions on this topic or anything else, please go ahead and chat it over now so that we can be sure to get to them all. We'll turn to the slides though. So again, the topic of slides, the slides topic is how to upgrade a Fidelity Solo 401k to allow for 2025 Mega Backdoor Roth contributions. So we're talking about a scenario where someone already has a solo 401k, a basic solo 401k at Fidelity, but they want to take advantage of the advanced features of our solo 401k plan, such as the Mega Backdoor Roth contribution capability. So it's still possible to upgrade that pre-existing solo 401k at Fidelity to our plan here in 2026 and make 2025 Mega Backdoor Roth contributions. Now, the foundation is always eligibility. So in order to have a solo 401k, in order to set up a solo 401k, you have to be eligible. So what makes you eligible is being self-employed with no non-owner, non-spouse, full-time W-2 employees. So as we kind of talked about in some of the initial questions, you don't have to have a formal legal entity to be eligible to set up a solo 401k. We have many, many customers who, for example, operate as sole proprietors without a formal legal entity. They might be 1099 independent contractors. In addition, we've got plenty of clients who operate via single member LLC, taxed as a sole proprietor, or an S Corp, or a C Corp, or even a partnership. Ultimately, the key in terms of solo 401k eligibility is that you receive and report earned self-employment income. So that could be, for example, income reported on Schedule C if your business is taxed as a sole proprietorship, or W-2 wages from your business taxed as an S Corp or a C Corp, or if your business is taxed as a partnership, filing Form 1065, income reported on line 14 of the K-1 that you receive from the partnership. The other piece of the eligibility criteria is that you cannot have any non-owner, non-spouse, full-time W-2 employees working for any business owned by you or a spouse, if any. So that means that if your spouse is working in the business, that's not going to prevent you from being able to set up a solo 401k. You could even have a business partner that's working in the business, as long as that business partner is at least a 3% or more business partner. You could even have contractors, so people that are not paid as W-2 employees but themselves are paid as independent contractors. That would not prevent or preclude you from being able to set up a solo 401k for your self-employed business. Now, you will need to have earned self-employment income for 2025 to justify solo 401k contributions. So as we mentioned, if you have an existing solo 401k at Fidelity, that's a basic solo 401k, a vanilla solo 401k, you could upgrade it to our plan and be able to make 2025 Mega Backdoor Roth contributions still here in 2026 but your ability to contribute is going to be based off of that earned self-employment income for 2025. So if you don't make very much money, you're not going to be able to contribute very much to the plan because you can't save more than you earn. So now that we've laid the foundation in terms of eligibility, why upgrade? Well, a basic Fidelity plan is going to be very vanilla. It's not going to allow for mega backdoor Roth contributions. So when we talk about making a mega backdoor Roth contribution, it's really a two-step process where you're first making a voluntary after-tax contribution, step one. And the reason that you do that is that takes advantage of the higher voluntary after-tax contribution limits. For example, for 2025, one can save up to $70,000 as a voluntary after-tax contribution. And then step two of the Mega Backdoor Roth strategy is to then convert those voluntary after-tax solo 401k funds to a Roth account. Why? Well, just like any other money in a Roth account, you got that potential for tax-free growth. So you first step is you deposit the funds into an after-tax solo 401k account. Then you move the funds over to a Roth solo 401k or a Roth IRA. But in order to be able to do that, you need to have plan documents that allows you to do that. Fidelity's basic solo 401k plan documents do not allow for those two steps. Whereas our IRS approved solo 401k plan documents, the plan documents offered by my solo 401k financial, most certainly do allow for those two steps. As a matter of fact, my solo 401k financial was the first solo 401k provider to offer a plan that supported the Mega Backdoor Roth. And we are totally neutral as far as where the accounts are opened up at. So even though Fidelity Solo 401k plan does not allow for the Mega Backdoor Roth contributions, Fidelity will most certainly open up accounts for people that bring their own Solo 401k plan documents. Fidelity happens to be the most popular brokerage where our customers are opening up accounts at. So as part of the onboarding process, we would help you open up accounts at Fidelity or the brokerage or bank of your choice. And then we'll help you transfer the cash and assets over from those pre-existing basic Solo 401k accounts over to the new accounts at Fidelity, or again, wherever you choose, that are governed by our advanced Solo 401k plan documents. And then other features are the fact that with our Solo 401k plan, it also allows for investing in alternative investments, true alternative investments, which includes, for example, cryptocurrency like Bitcoin, real estate, private placements, private stock, pre-IPO stock, precious metals, notes, etc. In addition, our Solo 401k plan documents allows for Solo 401k loans where you could borrow from your own Solo 401k account, and it's not going to be considered to be a taxable event or subject to penalties as long as it's within those Solo 401k loan terms and documented on Solo 401k loan documents. So we prepare those required loan documents as part of our service for no additional charge. Those loan terms are going to require that the loan is limited to no more than 50% of the balance, not to exceed $50,000, and then paid back in equal payments of principal and interest. The interest is either prime plus 1% or a CD rate plus 2%, with those payments spread over a 5-year term. It's also noteworthy that our plan will make the self-employed individual, the solopreneur, eligible to claim $1,500 in solo 401k tax credits. So setting up a new plan with us or upgrading an existing plan, like a basic solo 401k plan at Fidelity, to our advanced solo 401k plan will make the solopreneur, the self-employed person, eligible to claim those $1,500 in solo 401k tax credits. And just like we were the first solo 401k provider to offer a plan that supports the Mega Backdoor Roth, we were the first 401k provider to offer a plan that makes the self-employed business eligible to claim those $1,500 in tax credits. Now, when you upgrade an existing solo 401k plan to our plan, I think of it as a document update. So essentially, when you set up a basic solo 401k plan at Fidelity, you're not only opening up the accounts of Fidelity, you're using Fidelity's basic solo 401k plan documents, which is why they're so limiting, because those underlying documents don't allow for all these features that we just listed. So when you upgrade a plan to our plan, you could think of it as a cut and paste, where you're cutting out those limited solo 401k documents offered by Fidelity and replacing them with our advanced solo 401k plan documents that support and allow all the features that our clients are looking for. Now, as part of that process, new accounts will need to be opened because, from Fidelity's perspective, those accounts are governed by their basic plan documents. But again, those new accounts that are opened up for the restated plan can be opened up at Fidelity. Fidelity is very happy to open up accounts for people that bring their own plan documents. So that process is not setting up a new plan and closing the existing plan. It's really a continuation of that existing plan, but now it's just governed by new plan documents. So that's what they call the restatement process. So you adopt the new plan documents from my solo 401k financial, open up new accounts, which can be at Fidelity. They refer to them as non-prototype accounts. You're going to need separate accounts at Fidelity if you have different types of funds, like pre-tax, Roth, and after-tax, which you certainly would if you're making Mega Backdoor Roth contributions. Because as we outlined, when you make a Mega Backdoor Roth contribution, it's a two-step process where you first deposit the after-tax funds into a separate after-tax account before they're moved to the Roth account, or it even could be moved to a Roth IRA. In addition, since you have a basic solo 401k plan that's been upgraded to our plan, the cash and assets will need to be transferred from the pre-existing accounts at Fidelity to the new accounts at Fidelity that are set up for the restated plan. That transfer is not reportable, it's not taxable, because it's really just going from one account for a solo 401k plan to a new account for the same, just restated version of the same solo 401k plan. And of course, as part of the process, we're very hands-on in helping customers open up accounts at Fidelity or the bank or brokerage of choice, as well as transferring the existing assets from those pre-existing accounts at Fidelity to the new accounts that are set up for the restated plan. Now, in terms of the Mega Backdoor Roth, it's a very powerful strategy that allows individuals to save a very relatively high amount to a Roth account. For example, 10 times what could be contributed to a Roth IRA. So for 2025, the voluntary after-tax limit is the overall limit, which is $70,000, and that's per person. So if you've got two spouses, for example, that are both working in the self-employed business, as long as they have the self-employment income that each reports, they could each potentially contribute up to $70,000 for a total of $140,000. And then additional contributions can be made if the individuals are 50 or older. For example, the catch-up contribution limit is an additional $7,500. Or if you're age 60 to 63, the super catch-up contribution limit is $11,250 instead of the $7,500. Now, it's noteworthy that those catch-up contributions would not be contributed as a direct after-tax contribution. Instead, it would be a direct either pre-tax or Roth contribution directly to the pre-tax or Roth account. It's also noteworthy that the voluntary after-tax solo 401k contribution limit is not reduced by contributions made to another plan, such as a day job 401k plan. So that voluntary after-tax contribution limit applies at the plan level. So even though you might have maxed out your contributions to your day job 401k plan, if you've got at least $70,000 as self-employment compensation, you could contribute another $70,000 as a voluntary after-tax contribution to the solo 401k, then transfer that over either to a Roth solo 401k or a Roth IRA as part of that Mega Backdoor Roth solo 401k strategy. Now, the only exception to that rule that the voluntary after-tax contribution limit is not reduced by contributions made to another plan is the 403b exception. So if you are contributing or if contributions are being made on your behalf to a 403b, all of those 403 contributions, together with any contributions that you want to make to the solo 401k, the sum cannot exceed the overall limit. So the process, and we touched on this earlier, just organically, is first you make a voluntary after-tax contribution, and then you got the option to either transfer those voluntary after-tax funds to a Roth solo 401k or a Roth IRA. So let's assume that someone is age 45 years or older, the solopreneur, they operate their business via an S corporation, and they receive $100,000 of W-2 wages from their S corporation. They would be eligible to contribute $23,500 as a Roth employee contribution for 2025. And that's assuming that they didn't have a solo 401k plan through another provider, like a day job plan, and assuming that they already had set up the solo 401k on or before December 31st, 2025. And so let's assume they already have a basic solo 401k plan at Fidelity. And then on top of that, they can make an additional voluntary after-tax contribution of $46,500, and then move those voluntary after-tax solo 401k funds from the after-tax account over to the Roth. So at the end of the day, they have $70,000 in their Roth solo 401k for 2025. As mentioned, additional benefits are the tax credits. That's $500 per year for 3 consecutive years. Those are tax credits, not tax deductions. So it's a dollar for dollar reduction in your tax liability, which ultimately will more than cover our fees for the first 7 years. We charge $650 as an initial cost, which includes the $525 establishment fee, plus the first $125 annual fee. Then starting 12 months later, we charge our $125 annual fee that covers the second year. So if you added up all of our fees over the first 7 years, it wouldn't even amount to $1,500. So that impact is tremendous in terms of making the solo 401k affordable. Solo 401k loan, as mentioned, our plan would allow for taking a solo 401k loan. Again, that's up to 50% of the balance, not to exceed $50,000. Investment freedom. So of course, you can invest in typical brokerage type investments like stocks, bonds, mutual funds, ETFs. But in addition, our solo 401k account holders are also investing in real estate and private equity, metals, crypto, just to name a few. And then the compliance and ongoing support. So as the solo 401k plan provider, we do offer, for no additional charge, ongoing compliance support. So for example, once the value of the plan exceeds $250,000, factoring in even any defined benefit plan that's also set up for the solopreneur, if the total value exceeds $250,000, there is an informational tax filing requirement that applies to the solo 401k. The name of that informational tax filing form is Form 5500EZ. So customers or their advisors just have to let us know once the value exceeds $250,000, so we can add their plan to the queue to take them through that 5500EZ filing process, where we ultimately file the 5500EZ. We do it under the electronic filing system to make it easy for the client, for the advisors, for all parties. In addition to 1099R. So the 1099R would apply, for example, when you're doing a Mega Backdoor Roth contribution, because remember, again, it's a two-step process where you're first taking advantage of the higher voluntary after-tax contribution limits. That first step, that voluntary after-tax contribution, that doesn't need to be reported on the business tax return or the personal tax return. It doesn't need to be reported on the W-2. But the second step, when you move the money from the after-tax account over to the Roth solo 401k or the Roth IRA, that would need to be reported on a Form 1099-R. So customers or their advisors just submit the form on our website to give us the information that we need to add their plan to the queue to prepare the 1099-R. They just do it in a timely fashion, and then we'll prepare the 1099-R for no additional charge. So a key takeaway here is you do not need to leave Fidelity to unlock these advanced solo 401k features. You can still have your accounts at Fidelity, but have your plan through my solo 401k financial, so you can access all these advanced features, whether the Mega Backdoor Roth, loans, alternative investments, tax credits. You just need the right documents. And then, of course, if you're still trying to make those 2025 solo 401k contributions, you can still do it, but you'll have to set up the accounts and make the contributions by your business tax return deadline, including any timely filed extension. So time marches on, so it makes sense to sign up early, upgrade your plan now to give yourself time to open up the accounts, determine how much you're going to contribute, and make those contributions. We make it very easy to get started. Just go to our website, mysolo401k.net, click on open account. It's a quick 1-minute application where we just capture straightforward information, for example, about you and your business. If you have an existing solo 401k, you'll answer yes to the question about whether you already have a self-employed plan. Say yes, solo 401k at Fidelity or wherever it is. Enter the original plan effective date, which you can find in the adoption agreement, as we'll need that date in order to draft the plan as a restatement. Once you submit that information, payment is made. We prepare the documents within the same business day. So an email goes out with a link to our secure portal where you can download the documents that were drafted specifically for your business. You just download, sign, upload the signature pages. So there'll be an upload link in that same initial email that goes out that initial same business day. And then a third link in that same initial email that goes out the same business day where you can tell us where you want to have the new accounts at. So you could choose, for example, Fidelity from the drop-down menu, and that'll prompt us to guide you through the process to open up the new accounts. We also obtain an employer identification number from the IRS for the plan, which meets the IRS expectation, and just guide you through the process to open up the accounts, et cetera, et cetera. All right, wonderful. Thank you for your patience as we went through those slides. And if you missed some topics or you want me to go back over some, don't hesitate to chat over those topics. Or if you've got other questions, that's fine as well. And if you had to leave, you will get a link if you sign up via the StreamYard. So if you go to our website, mysolo401k.net, we post the links to the StreamYards every morning. So if you sign up after we terminate the session, an email will go out with a link to the recording. So even if you have to leave. So, and I see that this person, I'm not sure, I can't tell from their YouTube exactly what your email address is. If you want to email us at business@mysolo401k.net, I might be able to deduce it from your handle though. One second. It looks like it might be the first two words. It looks like we got two applications from you, and then we just received payment in the last, say, hour or so. So I see it's in the queue though. And it'll go out here in the next hour or so. Because it looks like we didn't get the payment until until the last hour or so. Thank you so much for signing up. We do appreciate it. And okay, got you. So what we'll do is I've made note of your email address, and we'll propose a time to call you in the next day or so. Thank you so much for jumping on, James. Yes, I think, as I mentioned, I think we got an application and then payment wasn't made until the last hour or so. So we're going to be following up here shortly. I flagged it for the team though. Okay. Thank you so much to both of you. As with the first question, I have a single owner LLC, taxes and S corp. I have a Roth and traditional setup with Schwab. Can the 401k integrate with Schwab to allow for after-tax contributions after elective deferrals are met? Definitely. It would be a very similar process where your basic plan at Schwab is upgraded to our plan, just like Fidelity will open up accounts for people that bring their own plan documents, Schwab will open up accounts for people that bring their own plan documents. So we would pre-fill the paperwork that Schwab requires to open up the accounts and then help you transfer the cash and assets over. You'd have three accounts: a pre-tax, meaning traditional, a Roth, and then an after-tax. And so, assuming that you have the self-employment income to justify it, you can make additional contributions as a voluntary after-tax. Let's assume that you've got $100,000 of W-2 wages from your S corp. Let's assume that you're under age 50. Let's assume that you didn't make contributions to another plan like a day job plan. You can contribute 100% of those $100,000 of W-2 wages from your S corp as an employee contribution up to $23,500. You can make an employer contribution of 25% or $25,000 as an employer contribution, and then you could do the difference up to $70,000 as a voluntary after-tax contribution. And there's still plenty of time to upgrade your plan here in 2026 and make those 2025 voluntary after-tax contributions. You just have to make them by March 16th, in other words, your S corporation deadline, or September 15th if you file a timely extension for your 1120S. Yes, we'll follow up with you. So if you missed the 5,500 deadline, there's a process to file under the late filing program through the IRS where they cap, they charge $500, but that means no late filing fees, which are $250 per day. So it's a no-brainer to do it under the late filing program. So if you just Google IRS 5500 easy late filing, it'll be one of the top pages that come up. They've got a good page on their website, the IRS, that is. I'm talking about the irs.gov pages. So yeah, what now is you need to file under the late filing program. Now, if you are a customer of ours, you can go ahead and handle that for the one that was filed on a late filing basis, but you can let us know and be added to the queue for next year. And then we handle that for no additional charge. Yes, I saw that. Yeah, I see it in the queue regarding my special trust. So it's going to be going out here shortly. It's just that we hadn't received payment until about, looks like about an hour or so ago. Please process the one with the S corp. Okay, 1 second. Let me make sure we've processed the right one. I see. Okay. Looks like that was not correct then. Okay, we'll have to rerun those documents. I'll flag it as soon as I get off. Can you answer the question about Schwab? Yes, we just answered it. Hopefully you heard it. It's going to be a parallel process, just like with Schwab, just like with Fidelity. You can upgrade a basic plan at Schwab to our plan and be able to make those Mega Backdoor Roth contributions. No, you do not have to do the employer contribution. You could skip that and go right to the voluntary after tax. You don't even have to make the employee. You can make 100% voluntary after tax and then transfer either to a Roth Solo 401k or a Roth IRA. Okay, we'll give you a moment to see if any more questions come across. So as always, we invite you to our community. We have the largest community of solopreneurs, solo 401k owners, over 32,000 members. You can join at mysolo401k.net/my community. It's totally free to join. All are welcome. Also, if this information is helping you feel more confident about your future, please take 1 second to like and subscribe. Liking tells the platform that the content is valuable, which helps other solopreneurs like you find it. Subscribing guarantees you get notifications of all of our crucial content that we deliver every day to help you secure your retirement. All right. Well, that's it for today's solo 401k session. Thank you so much for investing your time with us. Your time is valuable and your retirement future is worth it. If you haven't yet, please like and subscribe so we can keep building the solo 401k community. We'll be back here tomorrow with more crucial content to help you secure your retirement.